What's going on, guys? Hope you guys all had a good trading day. Today we're going to be taking a look at the triple Qs as well as the S&P 500. We're going to be talking about basically where the market could be heading short term. Remember, guys, I am a day trader, so I'm only looking on a day-to-day basis. I'm not really looking, 6 months down the road, 3 months down the road. I'm looking at, what happened today, what potentially could happen tomorrow. That's where I make my bread and butter. So let's kind of get into the charts here. So if we kind of look at where we stood today and where we closed below a very significant level. Not significant in a sense that, we're coming all the way back down to the December lows, but this is a big area here. This is the lowest close in the whole formation that we had here ever since we had this nice little gap up over the 301 into 313, 314. You can see this yellow line that I'm looking at here is the 200 EMA on the daily time frame. Now today we did close below the 20 SMA, which for the short-term sentiment is not good for the bulls. Now tomorrow we could bounce, we could put in an inside bar day, we could try to reattempt to cover that 200 EMA back to the top side. Now we are going to have some support down here at around 292, 293. This is a level that I want all of you guys to kind of take notice on, because this is where the whole little last breakout started here on February the 1st. So if we do gap up tomorrow, if the bulls, open flat or we have a green open, what I would be looking for here is some type of rejection at around 297 to around 300, 298, right? So 297, 298, if we get that rejection and, the market goes green to red, then things can get aggressive because it's going to be a snowball effect. They could actually have a lot of selling pressure to kind of break through this 292. And, we could actually close the week at around 290 or 289. That's definitely one thing I'm going to be looking at. Again, we've got some earnings tomorrow. We've got Nvidia coming out with earnings. So, do they kind of run it up? Today was a nasty close on Nvidia. It's got about another 10 points down. The same thing with Tesla. So let's kind of look at the S&P 500 and kind of see, where did we stand here? And it's the same kind of story. The difference between the S&Ps and the Qs is that on this, we did break below this linear regression, and we also closed below its 200 EMA. So on the Qs, right, if I just go back quickly to highlight, on the Qs, we have not broken below the linear regression. Okay, we lost a 200, we lost a 20, and on the SPY, okay, we've lost the linear regression 50 support. We've also lost a 200 EMA. We've also lost a 50 EMA. So we do have this Bollinger Band that's kind of sitting right here at around 397, which is about $1 and some change away. But our major support here for this whole kind of, bull, story, right, is going to be this 50-day moving average. Now this 50-day moving average is resting at around 396.5. If we do start to see any type of green and we start to stall out maybe midday, you could see an end of day sell-off that comes down here and tries to lose today's lows. And if we lose today's lows, that's your indicator to kind of go short and play that into the 50-day moving average and take your profits before you get to the 50-day moving average. Now you're going to have about a $1.50, $2, maybe $3 is stretching it, depending on where we get rejected, if we get rejected. Now again, we can open up down if there's any type of significant gap down in the markets tomorrow. And let's say you wake up tomorrow and the S&Ps is trading down around 396, 397. I would hold off on your short positions, allow the bulls to trap early shorts, and allow that position to try to go red to green. And you might be able to catch a reclaim over the $400 area back into 402. That's exactly how I'm going to play it. Again, we don't need to, get too excited yet until the markets start losing their 50-day moving average. Now, the S&Ps are definitely a lot closer than the Qs. If we kind of look at where we stood today, we closed at 399 and we have our 50-day moving average sitting at 396.50. And if we kind of go to the Qs and see exactly where our 50-day moving average is at, it's not all the way until 284. Now, here's one thing to kind of note. If the S&Ps do test the 50-day moving average and they close on it or below it, you can start to get technology to follow, right? So if you're looking for the bigger trade here, 294 as we close today into 284 is 10 points. That would be the sort of macro swing on the short term, week to week, day to day basis, being that, you know, technology is going to soon follow the S&Ps, right? If you believe that thesis and if you believe that storyline. Again, everything is changed if we do bounce off this linear regression. We close inside bar here on a green hammer candle or some kind of significant green bar where we get back over this 200 EMA. Anything back over the 200 EMA over 297 with a clean and successful backtest of the LR50 at around 292.5 is bullish, because then all this means is we're getting out of this distribution, out of this consolidation, out of this back test, and now the bulls have a potential to start to rally this back higher again. But again, if we do start to lose this channel, then your next pit stop is going to be 290. You're going to have some support at 289, which I could see us kind of floating and chopping around in this zone if we do lose this channel. But again, your big macro trade is not going to be until 288.65, and we are going to play that down to 284, which is a 50-day moving average. And again, if something happens and if we do lose the 50-day moving average, that potentially could start a new sell cycle into 269. I hope that that doesn't happen. Again, we're going to see some choppiness action. If that happens, we're going to get a lot of fake outs, and it's just going to be a lot, you know, a lot more of a messier trade than I would like to see. What I would like to see, you know, is two things. If we gap down tomorrow, I'd like to just gap down below the 292, maybe 291, kind of wick off of this 50 EMA here and then start to push up. Go red to green on the day, catch a nice long trade, and then see if we can close inside bar on a green kind of upward move. That would kind of set us up for a potential bounce day come Thursday and Friday to get back over the 200 EMA. But if we open up flat or we open up green tomorrow, definitely want to stay away from the longs. And I'm going to have to give it at least 1 to 2 hours to see if the bulls are going to hold their ground or they're going to kind of fade out after that first, you know, initial bump like we did today on some certain stocks. If you kind of look at Tesla, you know, Tesla had this nice, you know, pivot over its opening range and kind of put in, you know, about $1.50, $2 before it started to fall. And then, you know, after the first 30 minutes, Tesla really never gave anyone a bounce. It just kind of continued to like slowly grind lower and lower and lower, right? So again, keep these on watch. Again, if you guys are looking to trade, this is going to be a big area here to see if we can find some support at around 292.32. But again, if we do start to break that down, you know, our next potential soft landing could be around 289 or 290. Again, it all depends on how we open tomorrow. What you're looking for is any type of gap up. You want to stay away from the long side, at least give it 1 to 2 hours to see if the bulls are going to maintain that and kind of confirm those first hours highs to go back long. Stay away from the long if we gap up. Let it do its thing, let it consolidate, let it prove to us that we're going to continue to go higher, or start shorting the rejections off those hourly candles. If we do gap down and we have a significant kind of flush and washout tomorrow, hold off on shorting into the hole, and you're going to do the same process like I just spoke about going long. If we gap down, let's give it at least 30 minutes, an hour, you know, see, do the bulls kind of take control. But, you know, if we do wash into this, you know, 200-day moving average here, you could springboard back off this, and the bull case is now back in play going red to green. So it's going to be a very, very kind of tricky trade. You know, I don't think trading to the long side really gets easy until we get back over 305. This can kind of, you know, take us 10 points to the top side. And, you know, the shorts, you know, besides if we open up green tomorrow and then lose this today's low here, that will be an easy trade for a short side here. But as soon as we start to close below this 292.30s here and we get in between 290, 289, I could expect a lot of chop in this range. We could actually probably finish the day coming down into this area, then bouncing back up to the middle of the range, and then kind of just, you know, closing somewhere down here, which is not going to be make for easy trading. So what that's going to mean is, you know, let's size down. Let's wait for our setups to confirm, right? Let's not just take trades for the sake of trading. Myself included, sometimes I get bored and I start looking for things that are outside of my setups. Let's remain patient this week. Let's remain calm. Let's, you know, let the trades come to us. And what else was I gonna put on there? patience, obviously, you know, it's key. You know, don't rush and force trades. But, you know, I mean, size down. That was the other one. Let's size down, and let's take profits when we have them, right? Let's not just imagine that or assume that, oh, we opened up green, if we lose this level we're coming all the way back down here to the 50-day moving average, and then, you know, you drop $1 and then this springboards on you and you get trapped on the way back up. If you're trading the Qs or the SPYs and you get 50 cents, you get 70 cents, you know, that's a good trade. Take your money when you got it, kind of lock it up, wait for the next setup. If you're trading individual names, kind of, it's going to be a stock picker's market. We can kind of go down and look at Google. You know, Google has been really floating in the middle of nowhere. You can kind of see this, been battling with this 50-day moving average. Anything below 91.65 today has room down to 89. Definitely keep that on watch. Tesla is another one. This one here looks like it's ready to come down and test 186.66. But again, if we open up close to, you know, 189, 188, you know, somewhere down in this range, 187, hold off on your shorts because you can get trapped here. Let's look for the bounce. And then if not, we're going to really need to lose that 20-day moving average below 187, has room down to around 181. That would be your next trade. Nvidia has earnings tomorrow. This is going to be one that you're going to have to pay attention to. Anything below Nvidia, for me, in a perfect world, which obviously the world is not perfect, if Nvidia opens green tomorrow and then it fizzles out after 30-45 minutes and starts to roll over, I am all over this on max size underneath today's low. If we open green, if we consolidate and we lose today's low, this has 10 points down into earnings tomorrow. I'm not saying that I'm going to hold through earnings, but if we get a washout, we've got a lot of room down where they can really flush this into earnings. And if they do flush this into earnings, I can see earnings kind of lifting this back up, which is going to lift the overall markets back up. You know, what else do you guys want to look at? We could look at Meta. Meta has been really, you know, kind of a snoozer lately. You know, Meta, in order for us to get long, we got to get back over 178 again, confirm today's lows, 171.64. We have room down to 168. So you got about $2 there, $2.50 there. You know, could be a little bit choppy. What else do we want to look at? Netflix. We can take a look at Netflix really quick and see what Netflix has got going on. Netflix really started to base out over this channel here. You know, really, honestly battled, you know, for a good month here. Up and down and up and down and up and down before it finally lost, and now this is the lowest close that we've had in this whole kind of formation here, and we do have a gap that needs to be filled coming all the way down to around 325. Anything on Netflix below today's lows of 335.96 could see 330s, so definitely want to keep that on watch. Again, if you guys want to know anything else, any other charts that I didn't kind of mention, you know, list those down below in the comment section. If you guys want to learn how to trade, you want to learn how to trade pivots, you want to learn how to understand the moving averages and how I exactly find these gaps to day trade for, you know, profits, you know, join Evolution Traders. That link is down in the description box below. You're going to get access to the online community as well as 2 video courses. Also, if you guys are interested in wanting to day trade, but you guys don't have the necessary capital, that is one thing that kind of really, you know, really holds traders down, is because you don't have the capital. You don't have enough money to make 2 or 3 or 4 trades in a day. You don't have, you falling under PDT rule. You can't afford, you know, options that cost high premiums like Netflix and Nvidia and Tesla. And if you're wrong on your particular trade, then you're kind of just stuck holding the bag until tomorrow. If you guys want to get funded up to $1 million, again, I would not recommend anyone to get funded up to $1 million, especially if you're just starting out. I would go with something lower on the 6-figure range, 100,000, 50,000, 200,000. Get funded, put some money under management. I work with a fantastic firm. If you guys want to get, you know, funded so you guys can trade Netflix and Tesla and everything else, not just futures, right? Hit me up. I'll definitely tie you guys in and get you guys all set up. But other than that, I will see you guys on the next video.